Welcome back, everyone, to the Finance Frontier. I'm Jack, joining you today from JS Wealth Advisors.
And I'm Sophia, also with JS Wealth Advisors. We are tackling a topic that is arguably one of the most significant financial decisions people face, and one that is particularly complex as we navigate into 2025.
Indeed, Sophia, the housing market is top of mind for so many, whether they are looking to buy their first home, move to a new property, or potentially sell their existing one. The question is always the same, intensified by current conditions. Is now the right time? Should I buy, sell, or simply wait?
It's a decision impacted by so many factors: prices, inventory, and crucially, mortgage interest rates. Navigating this requires clear strategy and a deep understanding of the market landscape as it stands in 2025.
And that is exactly what we aim to provide today. Our blueprint for making informed decisions in the 2025 housing market. We'll dissect the forces at play and offer expert guidance on strategy, regardless of whether you're a buyer, a seller, or considering waiting things out.
This is the level of detailed analysis and practical advice that we utilize at JS Wealth Advisors to help our clients make significant property decisions that align with their overall financial picture in the current year.
So if you're contemplating a move, feeling uncertain about market conditions in 2025, or simply want to understand the expert perspective on the housing market, now stay with us. This discussion is designed for you.
Let's dive in, Jack, by first setting the stage. What is the current state of the housing market as we move deeper into 2025? What are we seeing regarding prices and inventory trends?
Well, Sophia, the trends continue to show regional variations, of course, but broadly speaking, we're still seeing the market adjusting to the rate increases experienced over the past couple of years. Price growth has moderated significantly from the peak, and in some areas, we've even seen modest declines. Inventory levels remain a key factor, often still below historical norms, though again varying by location.
So, while the frantic pace has definitely slowed, the market hasn't necessarily become a buyer's paradise everywhere. The lack of available homes can still create competition, especially for desirable properties or in resilient economic hubs.
Exactly. It's a market that feels like it's still negotiating equilibrium. Sellers who locked in low rates are hesitant to give them up, which keeps some properties off the market. Buyers are facing higher borrowing costs compared to a few years ago. This brings us to the absolutely critical factor continuing to shape the housing market in 2025, interest rates.
Yes, Jack, the impact of the swift rise in mortgage rates over the recent past continues to dramatically change the affordability equation. Even if home prices haven't reverted to previous levels, the monthly cost of financing a purchase has increased substantially for anyone taking out a new mortgage now.
Let's reiterate that impact, Jack. How does a change in interest rate affect the monthly mortgage payment on a typical home loan compared to the low rates many remember?
It's a profound difference, Sophia. Comparing a rate scenario from a couple of years ago, say 3%, to current rates which have been significantly higher, perhaps in the 6 to 7% range on a $400,000 mortgage, that difference can still mean paying over $1,000 more per month just for principal and interest.
Over $1,000 extra per month on a similar loan size. That continues to be the primary affordability challenge in 2025 for many potential buyers. It forces tough decisions about budget, location, and property size.
It shrinks buying power considerably. For sellers who also need to buy, they face the prospect of selling their current home, which might have appreciated, but then needing to take out a new mortgage at potentially double or more the rate they had. This move-up buyer calculus is heavily impacted.
And it limits refinancing for most existing homeowners who secured those historically low rates. Refinancing to a lower rate is unlikely unless their current situation involves a problematic adjustable rate mortgage or unique circumstances.
So, interest rates, reflecting the broader economic policy and market conditions heading into 2025, remain a dominant force shaping affordability and transaction volume. Understanding their persistent impact is crucial for making any decision today. Now, let's focus specifically on potential buyers. Sophia, what are the key strategies and considerations for someone looking to buy a home in this current rate environment?
The first step, Jack, after understanding the rate environment is a rigorous assessment of your personal affordability in 2025. Go beyond what the bank says you qualify for based on SEOs. Look at your full budget with honest numbers, including the higher potential mortgage payment at current rates, property taxes, which may have increased, insurance, maintenance costs, which can be significant, and potential increases in utility costs.
Stress test your budget against potential future changes. Can you comfortably afford that payment even if other expenses rise or your income fluctuates slightly? At JS Wealth Advisors, we strongly advise against stretching yourself too thin just to get into a home in a challenging market.
Get pre-approved for a mortgage early in the process so you know exactly what rate you can expect based on your credit profile and down payment today. This clarifies your actual buying power in the 2025 market.
Be prepared to potentially compromise on some non-essential features or location preferences to find a property that realistically fits your budget in this rate environment. The perfect home vision might need adjustment based on current financial realities.
Explore different mortgage options with your lender. While a fixed-rate mortgage provides payment stability, understand the terms of a 15-year mortgage, or cautiously evaluate if an adjustable rate mortgage makes sense only if you have an extremely high degree of confidence in a future event, like a planned sale or refinancing, before the rate adjusts significantly. This is a higher risk strategy best approached with expert guidance.
Look into specific programs available in your area or country for first-time homebuyers or specific professions that might offer down payment assistance, closing cost credits, or slightly better financing terms. Every advantage you can find helps with affordability challenges in 2025.
And critically, partner with an experienced real estate agent who deeply understands the nuances of negotiating in the current market conditions. Negotiation dynamics are different than they were when competition was solely based on bidding wars. Seller concessions like offering rate buy-downs or credits for repairs are more common topics now.
What about sellers, Jack? How should they approach the 2025 housing market if they're considering listing their property?
Sellers continue to face a market that requires strategic thinking, different from the peak years. Buyers are more sensitive to the total cost of ownership, which is heavily influenced by those higher rates. While inventory may still be constrained, homes might take longer to sell compared to the rapid transactions of the past.
So, realistic pricing remains absolutely key in 2025. Overpricing a home based on outdated comparable sales from the peak can lead to it sitting on the market, requiring price reductions later, which buyers often interpret negatively.
Work closely with your real estate agent to price your home competitively based on recent relevant comparable sales in the 2025 market, not sales from a year or two ago, which may not reflect current buyer capacity.
Property presentation continues to matter significantly. In a market where buyers have more time and are more scrutinizing due to the high cost of financing, investing in staging, addressing necessary repairs, and enhancing curb appeal can make a substantial difference in attracting offers and achieving your desired price.
Be prepared for negotiation. You might receive offers below your initial asking price, requests for seller concessions like covering closing costs or offering a temporary interest rate buy-down for the buyer, or contingencies that were less common during the frenzy.
If you are selling because you need to buy another property, fully understand and plan your strategy for that simultaneous transaction in the current market. Can you sell your current home and rent temporarily, removing the purchase contingency pressure? Or do you need to structure the sale contingent on finding and closing on a new property? Each path has unique risks and benefits in the 2025 market.
Now, for those contemplating the wait strategy in 2025, Sophia, what are the key considerations and potential unseen costs there?
Waiting can still feel like the most prudent option for some, Jack, especially if they believe current home prices are still inflated relative to historical norms, or if they are strongly anticipating a significant decrease in mortgage rates in the near future.
The potential upside of waiting is that if economic conditions lead to lower home prices or a material decrease in mortgage rates, you might be able to enter the market later for a lower overall cost of ownership.
However, and this is where unseen costs often reside, there are significant downsides to delaying your decision. The first is the cost of housing while you wait, whether that's paying rent that continues to increase or the cost of maintaining your current home if you're delaying a sale. Rent is a pure expense with no equity buildup.
There's also the risk that market conditions don't evolve as hoped. Prices might not fall significantly in your desired area, or rates might not decrease as much or as quickly as you anticipate. Or in some scenarios, rates could even go up further depending on inflation and economic growth. You could end up waiting and facing an equally or even more expensive market later.
And critically, there's the unseen cost of delaying your life goals. If you're waiting to buy or sell because you need a different home for life changes, starting a family, changing jobs, moving closer to relatives, the cost of waiting is the delay in achieving those significant personal milestones and the impact on your quality of life. Housing isn't purely a financial asset. It's fundamentally about where and how you live.
While waiting, it is paramount to strategically use that time to strengthen your financial position. Aggressively pay down high-interest debt, boost your savings specifically for a larger down payment, work on improving your credit score. This way, you'll be in a significantly stronger financial position regardless of how market conditions evolve when you eventually decide to act.
Finally, let's touch on the long-term perspective, Sophia. How should people view housing as an investment in the context of the 2025 market and beyond?
Housing has historically proven to be a solid long-term asset for wealth building for many individuals and families. This is primarily due to the potential for appreciation over long periods and the forced savings component of paying down your mortgage and building equity over decades.
However, it is absolutely crucial to understand that housing markets are cyclical and can experience the periods of stagnation or even price declines, as some areas have seen recently and may continue to see.
Therefore, viewing your primary residence solely as a short-term investment vehicle or expecting rapid appreciation in the current climate can be risky. Its fundamental purpose is providing shelter and stability.
For those considering investment properties, like rentals, the higher borrowing costs in 2025 significantly impact the potential cash flow and overall return on investment calculations. Rigorous financial analysis and understanding of rental market dynamics are absolutely essential before making such an investment now.
Focus on the core long-term benefits of homeownership, the gradual building of equity through mortgage payments, the potential for value appreciation over decades rather than years, and the stability and personal value of owning your home. Try not to let short-term market fluctuations dictate your long-term strategy.
Making a housing decision in 2025 necessitates balancing these long-term investment principles with the realities of current prices, inventory, and most notably, interest rates. It is a complex, deeply personal puzzle unique to each individual's financial situation, lifestyle needs, and local market conditions. There is no single universally correct answer.
So, to synthesize our expert guide to the 2025 housing market decision,
Rigorously assess your personal affordability based on current mortgage rates and a comprehensive look at your full financial budget. Gain a clear understanding of the specific market dynamics in your target local area, beyond national headlines, including prices and available inventory.
for buyers, adopt realistic expectations regarding property features and location relative to current affordability, explore all available financing options diligently, and consider working with an agent experienced in negotiation tactics, and this is relevant to 2025. For sellers, prioritize accurate and competitive pricing based on recent market data and ensure your property is presented effectively.
If the wait strategy aligns best with your assessment, do so intentionally by using the time to strengthen your financial position, but maintain awareness of the potential costs and risks associated with delaying your entry or exit from the market.
View housing, particularly your primary residence, as a long-term asset with benefits beyond purely financial appreciation, understanding that short-term market volatility is a normal part of the cycle.
Ultimately, making the right decision for you in the 2025 housing market, whether to buy, sell, or wait, is a deeply personal one. It depends entirely on your unique financial circumstances, your personal and family goals, and the specific conditions in the local market where you are considering acting.
We hope this comprehensive discussion from JS Wealth Advisors has provided you with the clarity and strategic framework needed to approach the 2025 housing market with confidence and make an informed decision that is right for your financial future.
Understanding these interconnected factors, rates, prices, inventory, and your personal finances is the essential first step.
Thank you for joining us today on the Finance Frontier. We appreciate you trusting us with this important and timely topic.
We'd love to hear what specific trends you're observing in your local housing market or what additional questions this discussion brings up for you. Please share in the comments section below.
And please, if you found this expert guide valuable, subscribe to the channel to ensure you receive future insights and financial blueprints from Jack and Sophia at JS Wealth Advisors.